Professor, welcome. Welcome back. All right. Martin, welcome. Fred, welcome. I just lost you, Aria, Bill. Good morning. Okay, audio is back. I hear loud and clear. Bill, Fred, Lalit. All right, thank you. Sorry about the delay, but I think we are back. Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of Tradespoon and Yellow Tunnel. And today we're going to have a live trading room open to trade stock and options using our technology alone. Welcome. Welcome on Discord. Welcome on YouTube channel. Thank you for participating. For those of you who are new, welcome. If this is your first live event, do me a favor, type in first. This is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve the risk, not suitable for everyone. You must be aware of the risk and be willing to accept them in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or will equal past performance. All right, very important. We had a market correction, pretty steep pullback on Monday. Right, VIX got to 60 level. It hasn't done that since pandemic, COVID pandemic. And the question is this over, right? Was this a sign of capitulation and market, and VIX is back to 20 level, or is there another wave of pullback coming? The idea that, probably nobody knows, right? It all depends on, Japan, Bank of Japan, right? They said that they're going to start raising interest rates as soon as the market sell off. They said, well, we're not going to do it while the market is selling off. I'm not sure what that means, right? That means that maybe they're not going to do it this week, but they might do it, a month from now, right? So that carry trade is also not sure how long it's going to take to unwind this trade. Plus uncertainty about unemployment, right? Is unemployment trending higher, or is that trend going to continue, or is that just one data point? And still uncertainty about interest rates, right? Is it 25 basis points in September, the rate cut, or is it 50 basis points? How many rate cuts are going to be? So when you're faced with uncertainty, the most important is to have a trading plan, right? Trading plan, avoid flight or fight, response, game theory. Doesn't matter what I think. What matters is what majority of the people think, right? And how people are positioned, right? The position, whether it's futures data or options data or institutional flow, that's very important. So I propose to have 30% of your portfolio in cash in case we have another leg down in the market. You want to utilize that cash to accumulate, and look at the portfolio drawdown, right? And have rules, right? We've talked about having no more than 4. Especially if you start trading, right? If you're new to Tradespoon or Yellow Tunnel, I would some other trading plan. Wait for 2 to 3 days to confirm the trend change. Right? This is a perfect example where we reached the bottom on S&P 500 at 510, right, on Monday, and then Tuesday we had a rebound. Wednesday looks like an up day. If 3 days we're not making new lows, then probably maybe this is not the bottom, but we're close to the bottom, right? We can start talking about bottoming process, right? So that's one of the rules. I would say right now still be long and short the market, right? It's unclear. All of the indices are below 50-day moving average. They all kind of pierce through. Some of them pierce through 200-day moving average and rebounding, but there's always, you could have, I guess, V-shaped recovery where it just vertically moves higher, but we don't know, right? From seasonality point of view, August, I think it makes sense to be market neutral right now. Market neutral, that means you can have, debit spreads, you can have cover calls, you can have mirrored puts, but where you have, or if you don't trade options, you can be, long stock and short stock. Wait for ABC patterns, right? Usually when you have market sell-offs, you have these, they come in waves, right? ABC, ABCDE, right? So, and also wait till end of day, right? End of day has been, even yesterday was the market bounce, it did pull back significantly toward, the last 15 minutes of the market. So I would say wait till end of day to make the trade. So these are your trading rules, right? I would document them. You can, my rules, right? Look at the concentration, right? Realize that a lot of the stocks are highly correlated to each other. Try not to call the bottom, but look for signs of bottoming process, right? Be flexible, right? Small caps, a week ago were leading the market to the upside. Now they're leading the market to the downside because the narrative has changed, right? The narrative has changed. So you have to be flexible, right? You have to be able to adjust. We talked about strike price selection and, how often you look at the account value, right? Try not to do it every 5 minutes, but more or less no more than once a day. So what happened? VIX hit 65. Roll back yesterday, continues to roll back. We're still above 20. I would say 20 is a kind of a line between there is still risk versus risk has significantly subsided. But obviously, this is a very sharp pullback in volatility. It does look like a capitulation process, right? You have very high volume, sell-off, and now a rebound. We're trading at 528, 529, right? So basically recovered all of the losses since Friday pullback, right? We had a Friday pullback on higher than expected unemployment rate, right? Unemployment rate went up. And we basically recovered all of the losses, right? Still below 50-day moving average. This uptrend is still broken, right? If you go back to the lows, 2023 lows, we've been for the past year or year and a half. This is October 23. We've been trading above this trend. This is the first time we significantly broke below that level. So I think as long as we're below 50-day moving average, right? As long as we're below 50-day moving average, we're still at risk of another leg down, right? This, we had sharp A. B, C. So the question is, do we have D and E? For me, I think that's the core scenario, right? The core scenario that we do bounce, but I'm not sure what the positive news that can, except that the market is oversold, right? But very quickly it's getting into the overbought position, right? We went from 510 to 530, 6% rebound. So the short-term market is getting to the overbought conditions. In terms of the model, let's see if it changed its predictions. So yeah, yesterday I think we were neutral. Today it's sharply negative, right? Because the model basically says, the market is overbought, right? I mean, it doesn't see much momentum above 530 and potentially get into the 480. So Spiders is getting to the overbought levels. Let's see, QQQ. QQQ is neutral, right? QQQ kind of led the market to the downside, so it thinks that QQQ is just going to trade sideways. So that I agree with the model. Let's look at the positioning, right? So in terms of position model, I think at least short term market is going to have it kind of tried to, it closed the second gap. It closed the second gap. The next overhead resistance would be closing the first gap, which is around 540, and that's where the, I think, 50-day moving average. Where's 50-day moving average? 540, yeah. So the first gap from the FOMC meeting, right? And see if so 530, 540 are the two overhead resistance. According to models, it's 530, but 540 is the resistance number one, resistance number two. And then according to the long-term prediction, right, long-term trend is still intact, right? So the long-term trend is still intact if you look at the 6 months prediction, but the model predicted 540 to be the low. We hit 500, right? So we overshoot by 10%, 36 by 6-7% overshot the lows. But what used to be the low, predicted low on the long term, is now becoming a overhead resistance, right? So as long as we're below 50-day moving average, bulls are still going to struggle with this downtrend. Any questions? So it's high, right? Last session. Yesterday's high, trying to break above that level. Small caps are similar price pattern. Semiconductors, they sold off the most, right? They're actually already closed Monday's gap, right? So close the Monday's gap. It's trying to close Thursday, Friday gap. Semiconductor, and they were leading the market to the downside. So now they're kind of leading the market on the rebound. Germany, Europe, same price pattern, closing the Monday's gap. Let's look at anything. I would look at the interest rate, 5-10-year yield. Ten-year yield did bounce back, right, significantly. So we're back to the Fridays before the unemployment data, right? So 10-year yield is overbought, right? Because basically we recovered Monday's losses and we recovered unemployment data from Friday. That means that people think that tomorrow, I would say, the next major event is the initial jobless claims, right? If it comes in higher than expected, right, 250. Anything close to 250, I think that would be bearish for the market. If it drops to 150,000 initial jobless claims, then I think that will give a catalyst for the market to move higher, right? But short-term yield is extremely overbought. Dollar also rebounded. We have Japanese yen kind of unwinding the trade, right? It's back to Friday's level. High yield bounced back significantly, right? It closed the first gap and now almost closed the second gap. So it's back to same thing, back to before the Fed FOMC meeting, right? But also extremely overbought, the high yield. That's about it. Let's look at the earnings. We still have earnings season. Disney's down 3%. Super microcomputer, right? We talked about the super microcomputer down 15%. So let's look at our positions. into the market. Congratulations. Thank you, Fred. I appreciate it. Yes. Thank you, Keith. Thank you, Scott. Voice has just appended 0.28 minutes. Sorry. Desi arrived at the conference. Bob is here. News and down on the bad news. Bob, yeah, I think the narrative has changed, right? The narrative has changed, and when the yield is up now, market is up, right? So I think now we are, nobody is afraid of inflation anymore, right? People are concerned about recession. And the recessionary trade is a little bit different because it's, your concern was the even interest rate drop. That means that Fed is concerned and they're gonna they're going to be forced to lower the interest rate, right? That's kind of the idea. All right, so let's see what the strike prices were selected. So on Disney, I did butterfly, right? Right now, market is highly volatile. We are at the low range, right? Volatility is oversold, right? We went from 60 back to 20 in 2 days, right? That happens extremely rarely. So I did the butterfly trade, 83 put on Disney. We're at 87, so we're still away. We're at 86. I mean, I have till Friday, so obviously if market is overbought and going to pull back, then the sell-off will accelerate. SMCI is at 538. Let's see. Uber, let's look at Uber, continues to rally, 67. Do we have Uber calls? And then Pelletier is at 28. Let's see, and Viona's earnings. Down 5%, so the Nordisk Missed earnings down 5%. LA Lilly. Trading on sympathy down 1%. Let's see what are the other interesting earnings. So Disney, I'm kind of still waiting, right? Disney, in terms of 83 put, right now it's, I mean, only if the market is overbought and reverses, you know, it will drop another 3%. So we'll see. I think the session low was 86. Yeah, session low was 86 on Disney. So for now, I'm waiting for the spread. CVS had earnings. I think they missed the earnings, so CVS is still down. Let's see anything else. Shopify. Let's look at Shopify. Right, Disney complained. You know, one of the Disney's issues that, you know, looks like food traffic has subsided, right, in the theme parks, and that's down. Shopify is up 22%. Right, Shopify is up 22%. So got good earnings. I got rewarded. Let's see. Anything else interesting? That's about it. What did we have yesterday after the close? Fortinet. Fortinet is up 23%, right? Strong earnings, extremely oversold, right? Looks like demand for their network gear is high, and it's up 23%, right? So companies are still delivering good, or some companies are still delivering strong earnings. And you can see Fortinet is up 23%. Wynn Resort and Trip, let's look at the leisure. Wynn Resort. Wynn Resort is still weak, continues to trade lower, and let's look at Trip. TripAdvisor also down, right? So it looks like people are traveling. Well, at least let's see how's Booking.com usually. Pretty weak, right? So Booking.com, TripAdvisor, airlines, companies, right? How's Jets doing? Still weak. All right. Yeah. So Bob, yeah, I think market is going to be down, right? So I think the correlation between interest rates, right? Just to reiterate, correlation between interest rates now is that when the rates are up, then the market goes up. At resistance aspire, add to hedges or trim longs further. I would wait. First of all, I would wait till end of day, right? End of day, you know, we kind of had similar price action yesterday, right? We had a strong rebound yesterday. We reached the highs, and then the last hour, we had a sharp pullback. We are at the resistance, right? I mean, I would wait. I mean, as long as we are above 522, we can just be trading between 520 and 5, the same spiders. So spiders basically says we're going to be trading between 520 and 530. I agree with that. I mean, if you're doing day trading, short-term trading, I guess you can. If you have a longer term horizon, I would wait because the next stop is 537, right? So I would wait till end of the day, and I would wait for tomorrow morning, because tomorrow morning I think market is going to move on the initial claims, because right now people are sensitive about recession. So any macroeconomic data that can point to potentially weakening of the labor market, I think would be cause the market to move. So for now, I would wait, right? Because it looks like we're already making new highs. We broke through yesterday's high, right? And we're basically 533 is your overhead resistance, is the gap, right? That's the Friday close, right? So Friday close is 532. Spider trades lower. Fred, I agree that if you're bearish on the market, one way to hedge is to buy TLT, right? This is Desi's trade too. He likes TLT. It did break through. Didn't get, so it basically reached the 2024 highs, right? The 100 level. That's a major resistance. But it did break through multi-months overhead resistance at 95. It's pulling back, obviously, yes. If you think there's another wave of sell-off coming, right, and interest rates are overbought, right, and they need to pull back, then I agree, then TLT is a trade, right? TLT is one of the trades that you can just buy. So personally, I think but again, if you're hedging the market and you buy in TLT, just remember they're now highly correlated, right? If the market is going to sell off, TLT will rally, right? Now, right? We're in different relationship. And 10-year yield is overbought, right? We're getting to the levels of basically before Powell's speech on Thursday. Major overhead resistance is 410. So it could get to 410 level first, right? So tomorrow rate will be at 410, right? Because unemployment maybe when the initial claims went down significantly, then we'll be at 410. If not, it will drop. Airbnb, right? Airbnb. Struggling, right? So travel and leisure, right? Travel, Booking.com, TripAdvisor, Win Resort, Airbnb, all week, right? All week. Disney's also had. So you can see that the consumer credit card defaults are rising, right? Personal consumer debt is rising. So you can definitely see that the economy is slowing down. Soft landing versus hard landing, and that conversation has been on for the past year and a half. Most economists think that we're still in soft landing scenario, right? That with GDP of 2%, over 2%, that's not a recession. Recession is usually high unemployment and 2 consecutive quarters of negative GDP, which we don't see yet. Thank you, Bob. Kevin. Costco is behind. Sorry, Costco. Costco, nice rebound. Yep, up 1%. Thank you. From the 2 standard deviation. Fed behind the curve, as usual, recession looming imminent to me. Fed should reduce full point. That is also, I think, the consensus among the economists that the Fed is behind and they need to start aggressively cutting rates. I think we're not going to know, Jackson Hole, I think, right? So August 22nd. So that's what, 2 weeks from now. So we still have 2 weeks of macroeconomic data. We have CPI, PPI data. But, until August 22nd, you're probably not going to know whether any questions? John Casco is still my favorite stock. Very nice, John. All right. Fed induce. Yeah, so if you think that Fed is behind the ball and they're not going to talk about if they will or will not, or how much they will cut the interest rate in 2 weeks, then I think short-term market is getting to overbought levels. Short-term is getting to overbought levels, and I would keep my hedges. So maybe not adding to the hedges, but I would at least keep the hedges and see what happens. But we are at the session high. We did close the first gap, right? Still below 50-day moving average. So continue to monitor. Let's look at the positions. So we talked about Disney. I'm gonna wait for Disney. For now, Disney is close to session high, down 2%. I mean, but so far, kind of a weak reaction. So for now, the trade is down. It needs to move, right? Either significantly higher or significantly lower. We'll see tomorrow if the sell-off will resume. I did put IWM bearish spread yesterday, right? So IWM bearish spread, sold the 210 call, bought the 250, 50-day moving average, right? I mean, it is below 50% retracement. It's below 38% retracement. There's a lot of overhead at 210 level. That's the breakout level, right? And now we broke below that level, reaching 200-day moving average. So I'm watching 50-day moving average. But short-term, same thing. Small caps are overbought. LA Lilly it's down 1% together with NVO. We'll see. I mean, they still have earnings tomorrow. So we'll see if tomorrow they can deliver better news than NVO. So still on LA Lilly and silver. Silver is not rebounding. It's not making new lows, but it's not rebounding, right? Like the rest of the market. I mean, granted, it did retracement from year-to-date low to year-to-date high. So still long silver, and still have Spiders put spread, 525, 540 put spread. So couple bullish positions, couple bearish positions. Short-term market is oversold, I mean overbought. I think it's due for a pullback. We'll see what happens. Any questions? Any questions on Discord? Grasser, welcome back. Mark here, Hydrated Muffin, Grasser. Thank you very much for participating. Bob, SMH below opening range. Let's look at 1 hour chart. It's still, I mean, it's trying to close the gap before the Fed meeting, right? So it almost closed. I think that's a lot of overhead resistance, right? There's a lot of overhead resistance. We need some kind of a positive catalyst for the market to rally, right? I don't know what the positive catalyst. It could be initial claims tomorrow, right? So if tomorrow we come in and initial claims at, I don't know, 150,000 or even 180,000, 190,000, or probably even 200,000, I think market will continue to rally. But if it's if it's closer to 250,000, right, or if it's more than 250,000, then I think market is going to pull back. So now we're very sensitive to these macroeconomic conditions, and then core PPI, CPI data, right? Next Tuesday, right? Next Tuesday we have PPI and CPI data. So those are the main events. Earnings are kind of, I don't think it's going to move the market. Obviously, I'm still not sure how to interpret, Japanese yen, right? It looks like it's a strong rally, right? So now we're correlated to Japanese yen. Japanese is down, market is up, but it's a strong up. Bank of Japan said they're not gonna, increase the rates when the market is unstable. Well, VIX is at 20. Does it mean market is now stable? So I just don't know how often they're gonna come out with these announcements. Looks like it's over the weekend, so maybe we're okay till the weekend. But that's another risk in the market, plus geopolitical risk, right? There's escalation. Israel and Iran. Iran said they're going to retaliate, and I don't know when it's going to happen, or if hopefully it's not going to happen. But if it does happen, what does that look like? And so a lot of risk in the market. Market is overbought. I propose to be market neutral again, and that would be my strategy. In terms of other sectors, let's look at maybe some of the longer term trends. Materials are still pretty strong, right? We're kind of trading in this range, but still a strong uptrend when it comes to materials. Home builders, still a strong uptrend, kind of nice rebound. When it comes to home builders, metals and miners are weak, right? A kind of sharp pullback, still a recovery, but still sharper pullback in metals and miners. China, still weak, rebounding today. VIX is back to 20 level, closer to 20 level, right? So that's very bullish for the market, right? If we do drop below 20, that would be kind of that line in the sand. Usually 20 is the line in the sand where the risk versus no risk. Industrials sharp rebound off of 120, still in strong uptrend. Dollar still. We talked about junk bonds. Sharp pullback, but recovered most of the losses. At this point, healthcare is strong, continues its uptrend. Consumer discretionary, sharp pullback, but trading at almost basically recovered all of. The retail sector is similar, recovered all of the losses since last week. Transportation, strong rebound in transportation, actually turning positive. Trading above last week low. Let's see, QQQ. Basically, this reached the 420 level. Basically, retested April lows on QQQ. Semiconductors retested April lows and had a strong bounce back. Value stocks are rebounding. They're outperforming the technology. They didn't get close to April lows. Similar pattern Dow Jones. Dow Jones and value stocks continue to outperform the market. Banks stage a strong rebound. Talked about small caps rebounding. Recovered all of the losses from this week. Utilities continue to outperform the market, right? So utilities are leading the market to the upside with the lower interest rates. What else? Energy, pretty weak, but again, recovered all of the losses from this week. And about silver, Eli Lilly, and VO. Japan, right? Nikkei had a strong rebound. Recovered all of the losses this week. Beck recovered the losses for this week. Amazon, similar pattern, recovered the losses from this week. Nvidia recovered the losses from this week. Apple, so very similar price pattern in a lot of the stocks, right? Bank of Japan actually turning positively in the market. Recovered all of the losses since Thursday. NSC is up. Uber continues to rally. SMCI. Still down. All right, any other questions on Discord? Thank you. Pessimist for portfolio. Yeah, so Coke was on the list. It's a defensive name, so I collect the dividend. Coke is one of the stronger stocks. This was one of the trade ideas this week. Philip Morris in the same bucket. Also utilities, right? Utilities are doing well. Outperforming the market, and healthcare, right? And this is usually kind of a recession-proof trades where outperforms the market and you're collecting the dividends. Thank you, Bob. I mean, declining interest rate environment, utilities are doing well, right? Because they're also interest rate sensitive. I mean, they're overbought, extremely overbought, but still, I mean, you have these sharp pullbacks, the one we had in June, but it's still a pattern of higher highs and higher lows. And I think that will continue. Lower interest rate environment, they're paying dividends for all of the infrastructure build out that Microsoft, Google, and Amazon are doing. All of that requires energy, and utilities are still providing most of that energy, not all. Fred, thank you. No, I appreciate you guys are participating. Thank you. Again, VIX doesn't move that often to these extremes. And I had this conversation with my wife, and she's like, "Oh, you should have known that we're gonna have this jump and market is gonna sell off." But this is precipitated by the Bank of Japan decision to raise interest rates by 25 basis points over that weekend. We talked about Bank of Japan, we talked about carry trade, but we've been talking about this for a few months already, right? Nobody knew, at least I did not know that it's going to happen on Sunday, right, and Monday. So timing these events is very difficult, right? And if you did carry trade and you did it, you were concerned about it since April or May, then you missed all of the rally since April's low. So But when you do see the sharp volatility, this is kind of going back that it's important to keep the rules, right? 30% in cash. You have 4 positions. You have, we've been hedging for the past few weeks with QQQ and spiders. All of these hedges are helping to offset some of the losses. I think, I think it makes sense to be, careful, cautious, to be cautious, and still, if you long the market, continue to hedge it. Continue to hedge it, from seasonality point of view. Usually, if you look even at last year, it wasn't as, we didn't hit 60 last year on VIX, but it was a very similar setup. And same conversation about interest rates, soft landing, hard landing, right? And, we had a sharp pullback, then we had a sharp rebound, right? But more than half of the losses were recovered on the, more than half of the losses have been recovered on the rebound, right? All the way to September, right? This rally continued all the way to end of August, right? Kind of similar setup right now. And then end of August, we had another leg down, right? We actually made new lows twice in the months of September and October. And not until the next earnings season, right? The next earnings season is going to be October, right? Next season, earnings season is going to start in October. Not until the next earnings season the market recovered, right? So it's a similar setup. We will also have elections that creates that volatility. So I'm not saying that history has to repeat itself, but it is one of the scenarios that can happen, right? And if you look at the seasonality, usually, August, September is volatile. So, I would expect that this. Any questions? Bob, any big earnings tonight? Let's look at the earnings tonight. We are on Wednesday. Oh, and I forgot to look at the position. Sorry. So earnings after the close. Occidental Petroleum is liquid and volatile. So Occidental Petroleum, Marathon Oil. Let's see, tomorrow morning before market opens. LA Lilly, but it's not very liquid. Coles is pretty liquid. KSS, maybe a butterfly on KSS. Dropbox, not very. Oh, that's after the close, before market opens. That's about it. I don't see anything. So Occidental Petroleum usually calls Occidental Petroleum. Those are the stocks that usually I do it in my personal account. Copper is a proxy for recession, right? Usually people look at the copper prices. They have dropped significantly. Copper is rolling over. So that is one of the indicators of whether people think the recession is coming or not. So I do agree that FCX is still weak. Metals and miners are weak. Travel stocks are weak, but technology stocks are still supporting the market. We've seen that with Fortinet today. Right? But should be more moderate. Yes, Bob. I will give her the message. Buffett, yeah. So Apple, thank you, Kevin. Yeah, Buffett has lowered his stake in Apple. That caused one of the reasons for Apple's sharp pullback. But it basically recovered. This is what? This is Friday pullback. Well, it didn't recover completely, but it's at this open session, open price. But still has recovered, 10% of its losses. Trading options helps minimize the risk. Yes, thank you, John. Thank you, John. All right, 9:17. Let's just look at I think the one important data I forgot to look is the positioning. So let's look at the positioning. Because it's important to see which levels are protected. So let's see if that data has changed. I mean, a lot of the put position, people unwound. But let's look. Volatility dealer exposure. So I'm looking at the gamma exposure, right? For spiders dealers along the gamma. The question is at which strike prices, right? And that will correspond to the levels that are well positioned versus not. So we're going to look at August 16th. Let's look at August 16th. So the first one is in steel 520, right? There's not much support until 520, basically. But 520 is well positioned, right? 515, 520. I think at this point, 30,000. I would probably up until August 16. I don't think we're going to drop below 520, right? Because people are buying the hedges, and that number is back to 40,000, right? And multiple 40,000. So at least for now, these positions are still there, and August 16 should be well hedged, which is next Friday. After next Friday, we have 20,000 at 510, right? So here, next level is session low. With this week's low, 510 has some positioning. Next one is 500. So after August expiration, right? After next Friday and after next, so I think market will trade in this 820, 830 range between now and August. But then we have VIX expiration on Wednesday, and then we have August expiration, which again, we know even last week, this whole thing started with July expiration, right? Right. So a lot of people are basically saying, well, when we have the July expiration, right, this is when VIX jumped to 16, right? So this repositioning happens where people are rolling, where institutions, a lot of institutions rolling their positions and rehedging. So I think something like this, kind of was the warning sign that all it takes is then some kind of like unemployment data go up, or Fed, not lowering interest rates, and then you have another leg up, right? So it's the similar setup. Next week we have expiration, and then any negative news like CPI data or unemployment data or geopolitical risk, and then market can get very volatile. Okay, yeah. TLT is going up. Last time we checked. Sorry, TLT is going down. Rates are going up, right? I think rates are overbought. TLT is oversold. If you still think there is another leg down, then this is when you buy, your hedges. That's all I have for today. Thank you very much, and have a great day. Closing bell, Scott will do the closing bell. Thank you, Bob. Keith is doing a good job. Thanks a lot, Bob. I appreciate the feedback. Thank you. I will pass that along to Scott and Keith. All right, guys. Thank you. Take care.